Welcome back everyone, I hope you're all doing well. In this video, we will be discussing the topic of a perfect sell or buy day in the markets. But before we get started, I want you to understand a few things. Number one is that I mainly use this model on Euro USD. So I advise you do the same and apply it to Euro USD rather than trying to extrapolate it and use it in other pairs. Number two is that there's no all-seeing, all-knowing algorithm which is booking price in this way, or some evil entity that's attempting to take your stop loss and all these things. That's a flawed way of thinking or a flawed school of thought. And my goal here is to bring you to a more logical understanding of how price moves or how the market functions, right? And this model and all PA is a function of large institutions attempting to fill their orders and their clients' orders in the most efficient way possible. That's all this is. There's no evil entity trying to ruin your day, okay? And finally, I want you to understand that this model will not present itself every day. It's down to you through experience, knowledge, and intuition to understand when this model is playing out and when you can capitalize on it, and when the market may be deviating away from this model and when you should be sitting on your hands, right? So without further ado, let's jump into this model and this video. So at 10 p.m. UK time, we get the printing of a new candle, the new daily candle. This is when a lot of positions are rolled over, a lot of positions are being adjusted, and algorithms are beginning to reset for the new day. And swiftly after this, we go into the Asian session. Now, the Asia session, we have to understand that it's very thin. The book and the depth of market is very thin. And the way that I like to explain this is using the analogy of a market, right? Like a Saturday market. If you go to your local Saturday market on a Saturday, it's going to be thriving, right? Because most people don't have work. There's more business to be conducted. They're more likely to go down to the market. The stalls set up because they know there's more customers, more clients. And like I said, more business will be conducted. But if you look at that same market on a Monday, it will be dead because most people are at work. There's less business to be conducted and the stalls won't even set up because they understand this, right? That Monday is the Asia session and the Saturday is like the New York and London session. During the Asia session, there's not much business being conducted in euros and US dollars. There's not much order flow in those currencies coming through, and therefore there's no reason for liquidity providers to be active in the book. Liquidity providers being the stalls, right? There's no business or not much business to be conducted. This creates a thin environment in the market, and because of this lack of volume, we tend to see that kind of passive sideways price action. And there are certain times where we see some volatility in Asia, but it's usually due to a relatively large order hitting on a thin book, right? Which can kind of cause those drifts in Asia. But yeah, so the main thing we want to understand is that the Asia session is very thin. We won't see any real tradable, PA during those times. Now, at around 5 a.m. to 5:30 London time, we tend to see some volume pick up as the European books open. Now, at this time, a lot of people refer to the New York midnight price. Now, I want you to kind of leave that behind. I know it's a good reference point to say, okay, cool, this is where our London protraction or expansion will occur. But you need to take your mind off of the New York midnight price and more to Asia high, Asia low, previous day's high, previous day low, right? Because these are actual benchmark prices which are relatively cheap and expensive. The previous day's high is deemed as relatively expensive. The previous day's low is deemed as relatively cheap. The Asia session is normally what sets the high and low of the day before London, and these are deemed as relatively expensive and relatively cheap prices. So anything above the Asia high becomes interesting for sellers, and anything below the Asia low becomes interesting for buyers in theory, right? So now this swiftly brings us into the London session at around 7 a.m., 8 a.m. We get the books opening for London. And if we are bearish on the day, we want to see a bullish expansion, right? And what this does is that this brings us into an area on our chart where it's more attractive for sellers to step in. And we don't want to guess this. We don't want to be selling up here. We want to wait for confirmation that sellers have stepped into the market and have shifted the direction. Now, what we have to understand here, right, with this consolidation region is that the more price ticks through a specific price region or a specific area, the more transactions have occurred at this region, and therefore the more psychological connection is built with the market, right? So if there's more transactions occurring at this price area, there's more likely going to be open interest or open orders at this price region. So as price moves away, there's going to be, imagine you're long down here, you're going to be in a certain emotional state up here, certain psychological and emotional state. Then as price begins to come down, you're going to be in a certain psychological and emotional state. And then here again, as your position begins to fluctuate, and these drive decisions, right? Even with algorithms, they're based on human decision making. And a lot of the time we'll see price come back to this and react from this area, right? Now, so what we wait for is sellers to step into the market. We want to see some intent being left behind in the form of an imbalance, and we want to close below this region here. Now, once we get that, we more or less have a confirmation that sellers are stepping in, and we are looking within this high and this low for some form of array. Let's see if we can do this. That is horrible. Some form of array to form here, right? Now, there are many ways to skin a cat. There's no one way to trade this initial entry, right? But you're looking for some form of array, some imbalance, some kind of area of volume, what I like to call a volume band, an order block, something, and you're placing your stop somewhere here above these arrays, right? Anywhere above there. So then we get the main expansion for the day, right? And then as price begins to tap into opposing arrays, you want to be taking some profit. As we get into 10 a.m. to 12 a.m., as we get into that London lunch period, we also want to be taking profit, because at this time we see volatility begin to die out a bit. We begin to retrace and rebalance the move, the expansion that was formed in London. And we begin to form new liquidity pools based on this PA to the left, right? Now, what I want you to understand is that when I have these sessions marked out, this is not the only times you can trade, right? This kill zone kind of theory is very flawed. You can see these expansions happen at any time. Yes, in terms of probability and when they're most likely to happen is at these times, but doesn't mean that you should only be entering at these times. That is something I wanted to make clear. But back to what I was saying, we tend to rebalance this move after 10 a.m., 11 a.m., 12 a.m. and prepare for the New York session, where we get new liquidity pools forming, and we prepare to fuel the next move for New York, right? Then what we will usually see is New York will pull into some form of array that was left in this London expansion. We will get the same scenario where we get our protraction into the array, we get sellers stepping in, right? We shift the state of delivery, we get an entry right here, and then price delivers lower for the day. And then finally, we encounter London close, right? Where the majority of the European participants are closing their books or closing their positions for the day. And you will see that we tend to fail to make new price levels, or we tend to hold new price levels because there's not enough liquidity or volume flowing through the books to sustain these moves. So this is when you want to be closing out the majority of your position, because we're less likely to see further price development into new areas. So that encompasses the model for the day. I hope you understood this, but I'm going to now show you some live examples on the charts to show you how you can use this in your day-to-day trading. All right, guys, so now I'm going to walk you through a perfect sell day example. The first thing we want to do is mark out our Asia high and Asia low. Anything above our Asia high is deemed as relatively expensive and areas where we can see sellers potentially stepping in. And anything below our Asia low is deemed as relatively cheap and where we can see potential buyers stepping in. Now, we also want to mark out areas of liquidity just beyond these levels. So this would be our sell side liquidity. This will be our buy side liquidity for the day. And we want to wait and see price interact with these regions and see what the reaction is from there. So here we can see, if I slow this down, right here, we can see we're approaching Asia high. We've now tapped into areas which are deemed as expensive. So we say, cool, we anticipate sellers to potentially step in here. What have we done here? We formed this buy side liquidity pool, which prices just ran through. Move that into the center, mark that out like this. We see price take this out, and then we see price begin to shift, right? Now we accept lower prices with intent, right? Before we go on to that, I just want to make it clear that this area was that area I mentioned about it's having a higher tick frequency. Look at this area compared to the rest of this leg. This is where the area that had the highest tick frequency, and therefore the area which has most likely the most area of open orders resting. And it builds a psychological connection within the market, and these fluctuations around it cause decisions to be made. So we close below that. This area of volume, right, which we can refine on the higher time frame. If I go to the 15-minute chart, you can see that this here was where that bulk of volume rests, right? If it lets me mark this out, this area here, those bodies, right? And that can be an area where price can tap into and respect. And then we're looking for areas to overlap. So we're looking for this imbalance right here as a potential area for liquidity to be injected. And then we're looking at this order block right here, this bearish order block, right? And now as price pulls into that, we can look for sell positions. If we take it one candle at a time, bang. Oh, didn't mean to get that. I wanted this one here, but we got a better price. And then in terms of stop loss, I'm putting my stop loss just above these highs because it's protected there, right? We have these arrays protecting us. So if I can't really move it along, we can do that, right? And now we want to see price beginning to distribute to lower prices. We see price take out this low, right? And also we want to be, I can't take profits on this replay mode. However, in this leg on the higher time frames, you want to find arrays anywhere in this leg, right? And use those arrays to take profits. However, our overall targets are still Asia low and sell side liquidity here, low of the day. So we pull back, right? Price then extends this low again, but not with, we weren't able to extend it too much just yet. We pull back. Now look at the times, right? We've gone into that London kind of London lull at 10 a.m. After 10 a.m. right, we move sideways. Now where's our liquidity? We've got this buy side liquidity here, which can be used to fuel the next move for New York, right? And then we've got liquidity down at these lows here. And another thing to see, right, if your eyes can see that, we have, I don't like how this is in the way, right? But we have this kind of sell model forming where we have the buy side of the curve on this side, and we have that sell side of the curve here, and our draw on liquidity be a number one, this Asia low, and this sell side liquidity here. And now we're looking for sell positions to target that. We sweep that sell side liquidity, buy side liquidity, we get that imbalance. Price is rejecting that now, and it's on a pretty clear path to our DOL. We come back, sweep some liquidity, and continue to our Asia low. Nice. Now here is the important thing, right? It's 4:15. It's very unlikely now, as the European books begin to close, that we are going to extend further. We can, obviously, but if you've got your whole position open, or you've got, quite a bit of your position open, you want to close that out here, because the likelihood of us pushing to extremes after this time is less likely. Even if you do want to hold, you want to make sure the majority of your position is out by this time, right? And you'll see that price, if we speed it up a bit, right? Price fails to extend this low, right? And here it's already 10:30. We've already rolled over into the new day, right? So you want to be out of your position at this time. But to mark it all out, this is our London protraction. If I get rid of this, right? This is our London protraction. Mark that with LP. This then becomes our New York protraction. Right, and then we get our London close down over here. And we go into that dead time, right? Bang. So that's our perfect sell day. Now I'm gonna find a perfect buy day to show you the same example on the flip side. All right, now this is our example of a perfect buy day. So as before, we want to mark out our Asia low and Asia high. Asia high being our area which is deemed as relatively expensive, Asia low being our area which is deemed as relatively cheap. And then we want to mark out the areas of liquidity just beyond those, this being our sell side liquidity. And then we have buy side liquidity at the previous day's high, right? So these are our areas of liquidity for the day. So BSL, PDH. Right now, these are the areas that our eyes are going to be drawn towards for that day. So here, let's see what happens. Way too fast. So we see price has transacted to our Asia low, but we haven't really had a protraction, and now we have. But this here we can mark out as our sell side liquidity pool. So if we take this, tidy that up, this becomes our sell side liquidity pool, bottom, and bang. You want that in the center for the text. Right, we've just taken that out, and now what we need to see is a shift, which would occur after price takes this out here. And also understand, look how we have that bulk of volume transacting, even in the whole area, right? The majority of that will be occurring here around that midpoint. But even if we focus on this area alone, right, this is where a lot of tick frequency occurred. And now as we deviate from that, there's a lot of decisions being made. And like I said, there's a psychological connection to this area in the market. So now we've tapped into these areas which are deemed as relatively cheap. And now we're waiting for some kind of shift. And we see we get that shift here. If we go onto our lower time frames, you see price closes above. We leave a bullish array here. Bang. And we also get this order block, this fractal OB being left behind here. To help which one to choose from, we can use our OTE like so, and you can see 61.8 more or less aligns with our OB. So we wait for price to tap into that. We don't quite get the entry. Just try and wait for a better price here. Okay, I'll take that. Right, and now what we're anticipating, it's 8:54, so we have more than enough time for some kind of extension. So the price comes a bit lower. Cool. Now this would be an area to start taking profit at, because we have extended into areas which are deemed as relatively expensive, right? You have to understand that price has pushed into areas which are deemed as cheap to inject liquidity, and now we're distributing that liquidity at areas which are deemed as expensive. So TP1 would have been around this region. We try to extend, we're reaching for buy side liquidity at previous day high. We don't quite touch into that. What time is this? This is now 11, so we can expect some form of retracement. This is our imbalance. We can probably, okay, this is it on the 5 minute. You can see this is our largest imbalance in this whole area. Right, and if we don't take this out now, then we can see a pullback into this region and a potential continuation. So this would be our New York protraction. Nice. We have some form of news event coming out here. You can see by that wick. You could enter straight off of this, or you could wait for some form of confirmation, some shift, but we're gonna have to drop into a lower time frame. But one point I want to make here is that, do you see how we leave this buy side liquidity open, right? If we haven't got divergence with dollar index here, then it's very highly likely that we're going to come for this buy side liquidity. If we have tagged this on DXY, then you want to be careful and you want to try and close your position here. But you know, we're very close. Let's assume we didn't get divergence, that DXY and EU didn't tap this area. We've still got time for New York to extend into this price region. So this is most likely our New York protraction. Let's drop into a lower time frame and see if we can, yeah, there's our shift. So can we get an entry from that? Not yet. Very close, but we don't get the entry just yet. I think this may leave us behind in this occasion. Yep. But do you see now, this is, if we look at it from a curve, right? This was our very short-lived sell side curve, and this was our buy side curve to now come to that original consolidation, right? And we can now get quite an erratic move from here straight into that previous day high. Bang. Right, and now we want to be closing this position here. even though we haven't reached that 3 o'clock yet, we've hit our draw on liquidity. And any time around now, we can see price begin to die out and cap off. If I, there we go. So you see now we're coming up to 10. This is the next day, right? And you can see we have that London protraction. Again, mark that with the LP. And you can take a screenshot of this for your own use. We have New York protraction. And then we have that London close over here, right? Perfect. All right, I hope you guys found this video useful. I hope you can, take some value from this and apply it to your own trading. And if you enjoyed this video, make sure to like, subscribe, leave a comment on what video you'd like to see next or any feedback on this video. And I will see you next time, guys.